Are you doing enough to manage risk in your portfolio? This week, we'll talk about that. This is Make Better Wealth Decisions, a podcast about financial blind spots, decision making, and how the reality of higher rates, global tensions, and tariff instability impact your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto. In the conversation I had last week with Rodrigo Gordillo, we talked about return stacking as a way of trying to squeeze a little bit more out of risk adjusted returns from your portfolio. It was, I think, a useful discussion, and it's a nice development that the industry is finding new ways to try to get better risk adjusted returns for clients. I wanted to take the opportunity today, however, to talk about managing risk in a more conventional way. We're in a world where things have changed a great deal. And there are three specific things that are different in the world now in 2025 that just are not like anything we've experienced in the past generation or two. We have a 40-year long bull market in bonds that has ended with the inflationary pressure that we're having right now. That's something that most people have never encountered before in their investing lifetime. We're in a situation right now where geopolitical tensions and wars are breaking out around the world. We've now passed the 3-year anniversary of the war in Ukraine. We are almost a year and a half into the war on the Gaza Strip, and there are pressures elsewhere throughout the world that threaten to escalate geopolitical tensions and break up military alliances that have been around for generations. That is a new reality that has not been part of what we have to deal with as investors for the past 35 or 40 years. Finally, de-globalization. There's a real risk that tariffs are going to be with us to stay for the foreseeable future as all countries retrench and try to bring jobs back home, reshore, and manage the risk of the supply chains that they've been relying on for many years being disrupted. So when you think of these three things that have all come together in the early 2020s from 2020 until 2025, you come very quickly to the realization that the world is different. And the investing environment that we've grown accustomed to over pretty much our entire adult lives no longer exists. So what do we do about that? Well, I would say that the most important thing that we as investors do is recognize first off that the world has changed. And as a result of that recognition, that we change the way we go about investing on the simple premise that the things that worked in the past might not always be as efficacious going forward. Bonds, which did very well for 40 years, are likely to not be able to offer the same sorts of absolute returns or risk adjusted returns going forward that they did for the 40 years from 1980 until 2020. Similarly, stocks and other things that rely on low interest rates and a stable geopolitical environment are not likely to do as well, especially given that many stocks are already trading at extremely high multiples. That means we should consider moving our assets toward other things that are more inclined to be safe havens in an inflationary environment. That means hard assets, things like resources, metals, certainly gold, real estate. Those are the sorts of things that will do very well in an inflationary environment, and at any rate are not likely to be particularly harmed if we have a major drawdown. It wouldn't hurt to have a little bit of money in stocks, but maybe have those stocks be outside of North America. It wouldn't hurt to have some money in infrastructure or in sorts of strategies that can hedge your bets by being, say, long and short simultaneously. The world is different. And the point that I want to make in today's session is that you need to think about that very seriously as you go about your investing. The things that have worked for perhaps your entire lifetime might very well not work for the next 5 or 10 years. And if you're going to continue to doggedly stick to doing what you've always done because it hasn't failed you in the past, you need to realize that there's a very real chance that it may fail you in the future. I'm not saying you have to, but you absolutely ought to consider making some changes before it's too late. This podcast is not to be construed as offering specific investment advice. Please consult a qualified advisor before acting. My books, Stand Up to the Financial Services Industry and Bullshift, are available online. If you'd like to meet to discuss how the topics in this podcast affect you directly, please visit my website.